What if I told you that a $90,000 Cadillac Escalade, the same luxury SUV that celebrities flaunt and rental companies once guarded like treasure, is now selling for as low as $12,000? Sounds impossible, right? But it's happening. And it's not just about one car, it's about the collapse of a giant, Enterprise Rent-A-Car, one of the biggest names in the global auto rental industry. Behind those green and white signs and smiling counter agents, there's panic. Parking lots overflowing with unsold vehicles, leases defaulting, cars being dumped at auctions for pennies on the dollar. The same company that once dominated airports and highways across America is now bleeding cash faster than ever. This isn't just a story about cheap cars. It's a story about how the entire car rental empire, from Enterprise to Hertz, is being ripped apart by a perfect storm of economic collapse, oversupply, and shifting demand. So buckle up, because by the end of this video, you'll see why people are rushing to buy, and why others are terrified of what comes next. The glory days, when Enterprise ruled the road. Just a few years ago, Enterprise was untouchable. With over 9,500 locations worldwide and a massive fleet of more than 2 million vehicles, they were everywhere: airports, suburban lots, corporate fleets. If you needed a car, Enterprise had it waiting for you. The company thrived on business travelers, weekend rentals, and insurance replacements. They built their empire on volume and convenience, mastering the art of fleet rotation, buying new cars, renting them out for a year, and then selling them as certified pre-owned. It was a brilliant cycle of cash flow. And during the post-COVID travel boom of 2021 and 2022, Enterprise couldn't buy vehicles fast enough. With chip shortages limiting supply, prices skyrocketed, and even used Escalades were selling for nearly $100,000. Every vehicle became a profit machine. But here's the truth about every empire: when you grow too fast, you forget the cracks beneath the surface. And those cracks were about to widen into a canyon. The overpriced fleet, when luxury turned into liability. When car prices soared during the pandemic, Enterprise made a risky bet: they overbought. They snapped up thousands of premium SUVs and trucks, assuming demand and prices would stay sky high. From $70,000 Tahoes to $90,000 Escalades, the company's lots were filled with luxury steel. At first, it looked brilliant. People were renting luxury vehicles for premium rates. But here's what they didn't see: those cars were depreciating faster than ever before. Once supply chains reopened, automakers flooded the market. New car inventories exploded. Suddenly, the used market, which Enterprise depends on to resell their fleet, collapsed overnight. The $90,000 Escalade they bought in 2022, now worth barely $30,000 at auction. And some, selling for $12,000 when rental wear and tear is factored in. Enterprise isn't just losing money, they're trapped. The interest rate nightmare, a silent killer. When the Federal Reserve began hiking interest rates, the entire business model of fleet companies started to crumble. Enterprise relies heavily on short-term financing to purchase vehicles. Every 0.5% increase in rates adds millions in annual costs. By 2023, those borrowing rates had nearly tripled. Cars that once generated profit now barely break even, or worse, lose money. Imagine financing billions of dollars worth of vehicles, only to watch them depreciate faster than you can rent them. That's Enterprise's reality right now. Meanwhile, corporate demand for rentals dropped as remote work reduced business travel. Tourism softened, and insurance companies tightened reimbursement policies. In other words, Enterprise got hit from every possible direction. And while they're trying to raise rental prices to survive, the market is flooded with cheaper alternatives: Turo, Uber, car subscriptions, and peer-to-peer rentals. Enterprise's old-school business model just can't keep up. The used car bloodbath: why Escalades are now $12,000. The biggest shock came when consumers realized that high-end used cars, once a symbol of luxury and stability, were crashing faster than tech stocks. The Cadillac Escalade, the king of American luxury SUVs, became the perfect example. During 2021, dealers couldn't keep Escalades in stock. Prices soared beyond MSRP. Enterprise saw this and bought aggressively, assuming resale value would hold. But by 2024, the used car index dropped nearly 30%, and large luxury SUVs were among the hardest hit. Fleet Escalades, heavily used, scratched, and nearing 100,000 miles, began appearing in auction listings. Some sold for $15,000, then $13,000, and finally, as low as $12,000. For buyers, it's a dream. For Enterprise, it's a financial apocalypse. Each sale locks in tens of thousands in losses per unit. Multiply that by tens of thousands of cars, and you have a multi-billion-dollar hole. Inside Enterprise's financial struggle, follow the money. Enterprise Holdings isn't just one company. It owns Enterprise Rent-A-Car, National, and Alamo. Combined, they manage one of the largest fleets in the world. But behind the impressive branding lies an increasingly fragile financial structure. The company is privately held, which means its books are hidden from public view. But analysts tracking auction data, fleet turnover, and borrowing patterns estimate Enterprise could be sitting on tens of billions in depreciated assets. Unlike Hertz, which filed for bankruptcy during COVID, Enterprise has tried to avoid that route. But they can't avoid the math. If their fleet value drops by 30 to 40% while their loans remain constant, they're effectively insolvent on paper. The company has already slowed new purchases, frozen hiring in some regions, and even quietly shut down smaller local offices. Insiders say Enterprise's leadership is in survival mode, hoping the used car market stabilizes before the next financial quarter. Customers feeling the impact, chaos on the front line. Walk into an Enterprise branch today, and you might notice something odd. Longer wait times. Limited car options. Prices that make you wonder if you're renting or buying. Behind the counter, employees are being told to do more with less. Fleet shortages during COVID turned into fleet overloads by 2024, but the cars being returned now are in rough shape. Maintenance backlogs are growing. Some customers report vehicles with bald tires, stained interiors, and mechanical issues. Meanwhile, price fluctuations are everywhere. You might pay $120 a day for a compact car one week, then see the same model for $45 the next. It's chaos. Enterprise is trying to balance revenue with liquidation, keeping just enough cars to operate while offloading the rest to cover debt. For customers, it means inconsistent experiences, higher costs, and confusion. The rise of new competitors, Enterprise's worst nightmare. While Enterprise struggles to modernize, new players are quietly eating their market share. Platforms like Turo have exploded, offering peer-to-peer rentals where everyday people list their own cars. Consumers love the freedom, variety, and cheaper prices. At the same time, automakers like Hyundai, Tesla, and Volvo have launched subscription-based car ownership models, letting users pay monthly for flexible car access. No middlemen, no rental counters. Even ride-sharing apps are shifting. Uber and Lyft now offer long-term rentals for drivers, cutting Enterprise out of the equation entirely. Enterprise, built on a traditional rental framework, is struggling to adapt. They've launched digital check-ins and car-share programs, but the tech infrastructure isn't keeping pace. Customers want convenience, not clipboards and counter lines. In short, the future of mobility is peer-driven and digital, and Enterprise is stuck in the past. Government bailout rumors, will history repeat itself? If this story sounds familiar, it's because it's happening again. Remember Hertz in 2020? When they filed for bankruptcy, the government stepped in with financial relief, investors swooped in, and the company survived, barely. Now, rumors swirl that Enterprise could be next. Some analysts claim the company has already approached lenders for restructuring deals. Others suggest they might sell off parts of their business, like Alamo or National, to stay alive. But here's the twist: the public might not support another bailout. After all, why rescue a company that profited massively during the pandemic, only to mismanage its fleet into ruin? If Enterprise falls, it won't just shake the car rental world, it'll send shockwaves through the entire auto industry, from manufacturers to used car dealers. A perfect storm, how Enterprise lost control. When you put all the pieces together, the collapse of Enterprise isn't random, it's a perfect storm. A mix of pandemic greed, bad timing, and economic tightening has pushed the company to the brink. They bet everything on an inflated car market, assuming demand would never drop. But when rates rose, buyers vanished, and supply exploded, their empire began to crumble. And here's the haunting truth: Enterprise isn't alone. Other major rental brands are facing similar chaos. This could be the start of a massive industry shakeup, one that redefines how we rent, buy, and even think about cars. The question now isn't if Enterprise collapses, it's when. What happens next, the road ahead? If Enterprise fails to stabilize, we could witness one of the largest fleet liquidations in US history. Millions of vehicles flooding the used market will further depress prices, not just for SUVs, but for sedans, trucks, and even EVs. This could benefit consumers short-term but devastate car manufacturers, who will face lower demand for new models. Dealerships will feel the ripple effects too, as auctions get crowded with discounted fleet vehicles. Enterprise might attempt to restructure, merge, or downsize, but make no mistake, the era of rent-a-car dominance is fading fast. The new generation wants flexibility, digital convenience, and transparency, things Enterprise never prioritized. This isn't just a corporate collapse, it's the end of an era. The bigger picture, a symbol of broken America. Enterprise's downfall mirrors something larger: the fragility of the modern economy. For years, we've been told that big corporations are too stable to fail, too smart to make mistakes. Yet, once again, greed and miscalculation have proven otherwise. A company once built on trust, service, and scale became blinded by short-term profit. And now, it's paying the price. The sight of a $90,000 Escalade being sold for $12,000 isn't just shocking, it's symbolic. It represents a broken system where value is temporary, and excess always comes back to bite. Maybe it's a wake-up call, not just for Enterprise, but for all of us. Act fast, or watch it fall. Right now, as you watch this, cars are being auctioned off by the thousands. Escalades, Tahoes, Chargers, and more, the same vehicles that were once luxury dreams, are being sold for a fraction of their worth. If you've ever wanted to own a luxury ride, this might be your chance. But move fast, because once the liquidation wave ends, prices could stabilize again. And for everyone else watching, remember this moment. The collapse of Enterprise isn't just about cars, it's a lesson in how quickly giants can fall when they ignore reality. So stay alert, stay informed, and never assume the road ahead is smooth, because in this economy, even the biggest engines can stall. This is the story of Enterprise, once the king of the road, now racing against time.